Welcome back. This is an update on the uranium complex. It feels like it's been an eternity since our last update because there's been a lot of action across pretty much all the asset classes, a lot of volatility, lots of ups and downs, and uranium is no exception. This is the update on UUUU, or the 4Us, which is the Energy Fuels Incorporated stock. And then we also have URNM, which is the Sprott Uranium Miners ETF, and URA, the global X Uranium ETF. So those are the three assets we've been following, and the three have been following very similar patterns, almost identical, of course, except for the actual price values, all their absolute numbers, things like that. So we were looking for a lower low in our last update, which was on May 12th. We hit kind of a major low in cryptos, and we've hit lower than that since in the equities markets. Uranium's been kind of in between. We've been seeing a bit of a bounce, so it resembles what we've been seeing in cryptos a bit more, as well as the bond market. But really, it looks like a consolidation so far. This is the daily chart, long-term, big picture view. We're going to revisit this momentarily. We're going to start off with what we've been seeing on the shorter-term time scale. This is the 15-minute chart, and we invalidated our upside green setup, and then we fell and hit a lower low than the low that we hit back on, January 28th. So this whole thing is part of our correction. Therefore, it was a B wave bounce and a C wave. The question remains, is this the entire C wave, or do we have further to go? There are multiple interpretations for what we can consider this. On the short-term picture, you could convincingly call this a low. We actually had our MACD at its lowest point here with a slightly lower low and a divergence. So there's a chance that we may be done with our correction. However, if we look at the action since the low, it's not perfectly 5 waves, but it could be counted as 5 up. I could actually mark it as a completed impulsive 5 wave up. So 1, 2, 3, 4, nice sideways 4th wave and a 5th wave. And we may be done with the correction. This could be an A, B, with a little lower to go in the C wave, or we may be done. The same story is seen in some of the other cryptos. This is not as visible. You don't clearly see a 1, 2. And as a matter of fact, this looks a little more precarious because this actually is a lower low, not a higher low. So in URNM, it's not as clear of a 5 wave, even though the overall shape is similar. And the same applies here. This actually resembles what we saw in the S&P 500 and the Dow Jones Industrial Average, in which our final leg down looks almost like a B wave. You have a clear zigzag here. I know it's a little hard to see, but we saw something very similar in the equity space. This is the S&P 500 futures overnight. Again, we'll touch on this as well, but we saw a zigzag down, which generally means it's a B wave down, and the whole thing may be a C wave. So again, we're not going to assume anything just yet. Again, we'll revisit that in a second, but overall, all these assets are doing the same thing, with UUUU giving us the most confidence inspiring 5 up impulsive rally. So we're not out of the woods yet. Obviously, we're looking to see if we see any more upside action. Maybe we finish a more complete looking larger impulse up. So shifting to that big picture, I was expecting a lower low, and I did mention very clearly all this bearish action we've been seeing since the fall. November 2021 was a pretty good harbinger of things to come. We started seeing some chop in the S&P 500 and the Dow back then, but we kept climbing higher, although it looks like we may have had an expanded flat correction situation going on in the Dow as well as the S&P 500. You can kind of see that it got very choppy. This looks like an ending diagonal in the S&P 500. Our high was on November, with this final rally very much looking like a corrective B wave bounce. The same thing also applies to the S&P 500, where we had a higher high, but one could argue it was a very corrective bounce. So uranium gave us a more clear clue to what was to come, which was 5+ months of correction. It's been a big, ugly crash. You guys were expecting uranium because it is a second wave in the stock market. We weren't expecting this particular degree of a 4th wave. So it's 1 degree higher than we expected. That's the story for another time, but we still would look better with a lower low. We did actually get about as low as we need to get to make this convincingly a flat correction, expanded flat. So an A wave down with 3 waves down, a choppy B wave up, and not the most complete looking C wave, but we got a lower low in uranium. We didn't quite make it to our ideal target zone, which would be the 30.2% retrace for a wave 2 off of our overall top. Same goes here with URNM. Clearly you see a lower low, but we didn't quite make it to our target zone either. But you can start seeing that MACD curling back up. That's usually a sign that we're approaching a bottom. but generally means that we may have a lower low to come where we see a divergence up in the MACD, the MACD, while we get a lower low here. And same thing here. Here, it actually looks more like a double bottom. This is URA. We got a slightly lower low, but here it looks even less complete, in which this is best counted as a three-wave pattern. This looks like a zigzag. You got an A, B, and a C. So all of these look like they really need a fifth wave lower, although URA looks the most like it needs it, although it got the closest to its ideal retracement box. So that's where we are right now. Not much has changed. And on the big picture, our rally that looks much more promising up close looks much more like a consolidation. Again, you see the same kind of thing, the curling up of the MACD. Typically, your MACD is most stretched at the bottom of the third wave. So again, this is a C wave impulse down. That would be the completion of the movement with a clear three wave down for our A wave. So again, that would be the third wave. It has hit about where it needs to hit in terms of Fibonacci extensions. And again, same thing here, clearly three wave down, and same with the URA. So shifting back to our equity space, it's been a grueling correction. We've even the best traders have been struggling with this, whether you're a bear or a bull. It's been brutal. You have powerful rallies, and then we have things just break support and crash down. As a matter of fact, on Friday, it looked like we had lower to go, and we had a powerful rally to complete the day. And we've seen that upward momentum continue into the overnight hours. This is local time right now is Sunday evening. So futures are trading. It's not quite morning yet. In about 10, 12 hours, was it 10 hours or so, we'll have the actual S&P 500 open up, and we can see some actual action. We're very close to resistance. If we break through the top that we had on Friday, there's a very good chance we could count to 5 with impulse up, and that could change our outlook drastically. Of course, we don't have the overnight futures in this particular asset class right now. So if you're tracking uranium futures, maybe you could give us a hint. Right now, we're not seeing anything conclusive. We're watching the stock market for any clues to see what can happen next. So longer term, I did go over what to expect. If this is the bottom, we would expect to see a 5-wave impulse up and the 3-wave pullback down. I'll redraw it like I did last time. So if this is the bottom, you want to see some kind of a 5-wave impulse up with the appropriate proportions. Typically, you see a bit more of a dog leg for the 4th wave, even if the 1, 2 are not clearly visible. And you want to see a 3-wave correction down, because that is the only way to ensure you have a solid 1-2 setup. That's what we look for in Elliott wave theory: a 1 wave, a 2 wave. The 1 should be an impulse, 2 should be a corrective wave. And once we pass through the top of the first wave's top, then you have a confirmation that we have at least a local bottom. Then you have to pass the bigger test. You have to have a much bigger impulse, because Elliott waves are fractal. Otherwise, if you stop short of having a full 5-wave impulse with this 1, 2 in place, there's a chance to correct a fake out bounce. We've seen that numerous times in the metals complex: silver, gold, GDX, you name all those. Been seeing false start after false start after false start for well over 2 years now. So that's how it is with commodities, and especially in a tricky situation. I don't expect this to be as tricky, because again, we are in a second wave. Second waves are a lot less tricky than 4th waves. And you can see that illustrated here. The 4th wave went sideways. We had it start on March 18th, ended in August. So March to August, that's about what, 5-6 months. And that's on the lower degree. We're of course on a higher degree second wave. So when this is finished, it should finish pretty hard. Once we are done, we expect to see a first wave bounce. So I'm assuming, let's assume that we already have our low in place. If it really is over, we should see a bigger rally that gets us over $14 to about $26, somewhere in that range for the 4 U's, UUUU. That's our standard expectation. For URNM, 117 to 183. Again, that's the 0.382 to 0.61 extension. That's where we expect a larger first wave to hit. And URA, we would expect that to get us to $33 to $48. So that's a pretty good return just for the first wave alone. And as I mentioned, if this really is a longer term first wave, which I really do believe it is, we might have several years of incredible rallying overhead. We may see a decade or two of incredible outperformance from the commodities in general, not just uranium. So plenty more updates to come. Watch what the S&P does. Watch what cryptos do. Everything is correlated at the moment. Even the bond market has started to break back up in what appears to be a 4th wave correction. So watch the sentiment. May the sentiment and the force be with you. Subscribe so that you don't miss anything. Till next time, thank you for watching and happy trading.